Okay, good morning everybody. Welcome back in. I want to do just a really quick review to see what we did yesterday. Let me close this out. And guess what we'll do is we'll just look at the 512 so we can see the fine details of what happened yesterday. And I think probably the sexiest thing to happen was the first level of expected support that we had. You saw it on the review from yesterday. Was this right here that we highlighted? It was the first, when we zoomed out. I'm not talking about the short time frame moving averages, but the first major support zone that we were looking at was 42.88 quarter, which is our holy orange power level, and the close of the day before at 42.88.75. When we came in, we said that we expected the market to probably push and come up to the high the day before and potentially break out. But we talked about a scenario where a lot of times we have a high in the market, and what happens is price comes up, it pushes through, and then it fails right back down into the previous range from the overnight or the day before, or whatever it was. And that's exactly what happened. So we came up above the red line, which is the high the day before, peaked through, and then we started to sell off about 20 minutes after the open, after we again rode at the back end of the FMA the whole morning out of the open. Could have been buying that. After that, we then came down and started riding the back end of that FMA all the way down to our first expected support. So beautiful hold there. Then we got an even more extreme hike up into the highs, breaking through the high the day before, and then failed again. So two fake outs out of the open, and then this pullback, which to me honestly looked like the market was going to come back, hold here, right? Hold the close of the day before, hold the holy orange power level, which it does so often, and then break out, and then we were going to get our push up into this new pocket up here. But they faked everyone out, and then we started selling off. And if you remember, I believe we were broadcasting here, and we talked about maybe trying a pullback off the 200 here, maybe trying a hold off the 200 there, and then we talked about riding the back end of the FMA all the way back down there. So next thing that happened was the market held our first expected support zone, and then our next level was 42.87, the market scaffolding. And remember, the market scaffolding here is literally the market held below it all night, and then it popped above it and literally pulled back and held it almost to the tick there on the top end, right? And then finally we broke out here coming into the open. And then you can even see back to previous days here, this same market scaffolding level, right to it, fail, right to it, fail. Get above it, pull back, hold it to the upside. Get below it, and then hold it down below it. And then finally break out above it. This level here was the next level that made sense for support yesterday. So we held this one for I think a 14-point bounce. And then they came down and they held this, the 42.87 area, for like a 20-point bounce. And this was that fake out to the upside. So you had two opportunities to buy a level, take no risk on the first level, and then the second one we took about 1.5 points of risk, and then it rotated for the biggest bounce of the morning. Again, it was about 20 points to the upside. That was the big fake out, and then that was it for the bulls. And if I could zoom out here, we can look and see here are those beautiful plays getting through the 200 and then coming to the back end of it and holding it with less than a tick or two of a break, and then coming down, holding the back end of it again. And then there's that pocket, that first pocket. It even holds it again for a scalp, and then holds 87 for a scalp right to the 200. Okay, holds 87 again, holds the back end of the FMA this time, and then finally at the end of the day, our next expected support that we talked about in our pre-market yesterday at 73.75 was the low of the end of the day. And it held multiple times. In fact, it held and then bounced right to 87, broke it by one tick and pulled back, and then we held 87 and then 73 and then right back to 87 again, and that was it. And then if you notice here, let me try to get some of these lines out of the way. This little red line was one of the first things we talked about, the overnight low, and talking about if the market was to break down through there, we were talking about this first support level here at 87 or 73, and then down into our scaffolding at 64.25. And so that overnight low was an important level to get through for the bears. And all through the end of the market here, it literally just held our support zone, 873, held the close or the low of the overnight session, lit nearly to the tick, and it just parried back and forth between these levels. And this is just kind of par for the course nearly every single morning here with these levels. They literally, just like I said yesterday, with the bowling, the bowling alley example, you have all those bowling pins, you have your bowling ball, and then you have the bumpers on either side, and it's almost like the market is just using these from bumper to bumper to bumper. All right, so beautiful plays yesterday. If you didn't get any trades off these levels, then I don't know what to tell you. You took, again, less than 2 points of risk. You can't get more accurate than that on the S&P, and you got pushes of 5, 10, 15, 20 points in many cases off these levels. So if you didn't catch anything, I don't know what to tell you. Of course, I do want to emphasize, since if you're brand new, you should probably just be observing, just watching and seeing how all this stuff works. But definitely plenty of low risk opportunities to make some money yesterday with all the levels we gave you. And again, nearly every single level we talked about holding for a bounce held almost perfectly. So that's our review for yesterday. Let's get started for today. So first things first, we have to get our news up, and to be honest with you, just from my basic us.econoday.com map or schedule here, Tuesday doesn't really have much going on. Yeah, there are these announcements and stuff, but there are no major news events, which are these red and these green dots that you see here on some of the other days here this week. So today there's really nothing to really pay attention to in terms of news. Of course, at any moment in the world, something could happen, and that could really influence the volume and the volatility in the market. But nothing planned today. It could be maybe slow. Who knows? So nothing to mark on the charts in terms of a specific time for a planned news event. Now what I want to do is jump up now, and we're going to look at the daily chart first off. We already talked about the weekly and the monthly at the beginning of the week here. Like we said, it's breaking out to the upside, and things are looking somewhat strong, even though we keep getting bearish signals from the highs every time we try to push higher here. That do lead to little pullbacks, but then the bulls jump in and we popped out, and now we're up above, and this 42.35.75 is 50% of last week. So here's this week's candle up here. We are way above 50% of last week, and we even popped up. There's that pop above the high of last week. That was our peak above and fail from yesterday, right? So let's go down to the daily and look at what this previous daily candle looked like. Let's look at what happened here yesterday. And that candle, to me, looks like a very typical reversal candle, right? We got this peak up through the high of last week, and then the bears quickly brought it right back down. Now here's the problem. They brought it back down, and it's a very shallow pullback, right? They are holding, and even in our overnight session before the open this morning, they're still holding from the lows of yesterday, and the bears are having trouble kind of breaching down below there. So the daily, to me, the previous daily candle looks pretty bearish to me. Do we have a bearish signal on the daily like we did back before the pullback from May 30th into the 1st of June? Or do we have, like the nice bullish signal we had on May 24th that led to this nearly 200-point breakout to the upside? No, we don't have a signal there right now, but it does to me look like a fairly bearish candle. So that's something to keep in mind coming into this morning. And so when we go down and we look into our previous daily levels, right, the high of yesterday, the low of yesterday, and 50% of yesterday, actually I'll try to zoom in even more here, you can see that we're still holding down here way below 50% of yesterday. With that really bearish candle, that is something that would make sense, right? When you have something really bearish, the market will typically have trouble around 50% of that previous bearish candle. And then we have, the continuation lower in the case of a bearish setup. So holding below 50% of yesterday is definitely a decent clue there. But the bears on the pullbacks, like I said, they can't really get through the low of yesterday, which was this green line. And again, that low of yesterday was this major swing high we were watching in the pre-market at 42.73.75. And there's that bounce that we saw when we scrutinized down to the short time frames. And let me just see. Okay, someone texted me and Ted sent me something. Okay, perfect. So want to point out that this pullback from yesterday, if you measure the leg, obviously 50%, because we never broke the low of yesterday or the high of yesterday, is our magenta line, right? So 50% of yesterday is right there. But I went ahead and marked the 61 and the 38. And interestingly enough, here in the overnight session, let's see if we can really zoom this in here. We really can't get through that 38 retracement, right? It wasn't a perfect to the tick touch and a pullback, but for all intents and purposes, that was a nice 38% hold there on this attempt by the bulls to bounce from yesterday's low. So these are some just kind of general things to be aware of. Again, the 61.8 up there, the 50 and the 38 of this small little leg pullback that we're currently trading within right now. Now, I want to talk about the signals that we have on the higher time frames. The daily doesn't have that signal, right? It doesn't have a bearish signal up top. However, remember what we talked about yesterday, and I posted about this in our chat room and maybe even mentioned it somewhere else. But remember yesterday when we were coming into the open and we were looking at the 4-hour chart here, and I said that there's a possibility that we could peak up through the high of last week, the high of Friday here, and push up. But when that happens, and you can go back and watch the recording, when it pops up like this, we could probably get a lower high on our RVI, and that might be a perfect bearish divergence pattern that leads to a pullback. And sure enough, after that pop yesterday, the 4-hour closed and it looks like this. Beautiful bearish divergence off the high of the day, right? And then we got the pullback that, towards the end of the day we pulled back and then bounced right off that level I've been mentioning, off 73.75 there. So that is the pattern I literally told you made sense, and there it is. So we've got a 4-hour bearish divergence from yesterday's high, and we have the hourly as well back here. So we go over to the hourly chart here. Both of the major highs from yesterday gave us beautiful bearish divergences. And again, ever since that pop to break out through the high of last week, we've then sold off. And again, 60-minute 4-hour bearish signals up there. And on the daily, a pretty bearish looking candle. So this is giving me a little bit of a bias this morning. It's telling me that it would make sense for the market to continue to pull back. However, we have conditions, right? The market's going to do what it's going to do. It can give the most beautiful signal and then go ahead and disrespect it. So we have the signals. They typically work beautifully, but we need conditions before the market opens this morning. So what we're going to say here, given all of the high time frame information we have right now, it looks to me like a pullback makes sense, okay? But here's the problem. The market pulled back and has been having a lot of trouble getting through the low of yesterday, which was, again, that major swing high we marked on the charts at 73.75. So if the bears can go ahead and get through the low of yesterday, our green line on the chart, then that's what we're expecting. If they can't do that, then we've got levels up above that would make sense for the bulls to pop up into. Now, does that mean that the bulls are going to rip through and we're going to get a breakout back to new highs today? Anything's possible. So I don't want to say that's not a possibility here. But they're going to have levels in the way that are going to be trouble. So let's look at what we have above us here this morning. If the bulls do end up jumping in here and ripping things back up, because And this is what you're going to see some mornings. And remember, I said yesterday that in our pre-markets, we're going to have mornings where it's very, very cut and dry, very easy. There are going to be other mornings where it's really hard to really eke out a good bias or anything. And then there'll be other mornings where maybe it's a mix of it, not the most clear, but not also the most not clear. And so this morning, I need to mention here that we got that multiple time frame bearish signal from yesterday's high, right? And we got this pretty decent pullback, about 65 points or whatever it was. However, in the overnight session here, when it came down and we made this rotation into the overnight, so if I go to my hourly so we can see more detail, when we rotated here from the low of yesterday and popped up into the overnight session, we actually got an hourly and a 4-hour bullish signal. So just like we had the bearish signal from yesterday's high that led to the pullback, in the overnight session we actually got a counter signal. So we're kind of stuck inside of this range right here, and we have an argument for the bulls from yesterday's low. That would mean we should try to pop higher, and we've got the bearish signal from yesterday's high that indicated a pullback, and we basically got the pullback so far. So we're stuck inside of, and this is a little bit more of a mixed type of setup here. We've got a great argument for the bears from yesterday's high. In fact, the daily candle itself is just a bolster to the 4-hour and the hourly signals. However, we've got the counter signal from yesterday's low, and that counter signal, we don't quite have the daily on board, but we do have the 4-hour and hourly signal. So we're stuck within kind of two scenarios here. If the bulls can hold from the low of yesterday, this green line is going to be our line in the sand here. If the bulls can hold from here, and remember, and I need to kind of mention that doesn't mean that if the price gets below here, that it's over. Remember what happened yesterday. If the bulls could get through the high of yesterday, remember what we said. We need to see it get through and really hold above it and actually start to go. Because what can happen, and I warned you about what could happen, is we could pop through and then bam, fall right back into the range. So this morning here, if we break the low of yesterday, that doesn't mean we're now going to jump onto the bearish side, because what could happen is we could just peek on through and then come right back up. So just be aware that's possible. So if the bulls can hold this low, or again, if they peek down just a little bit through it and then they pop back through, especially with maybe a bullish signal down off that little low, then we would expect this attempt to come up and break through these levels above. If the bulls cannot hold from down here and there's a rejection from maybe from where we are now, or maybe it pops up into one of these discrete levels and then we fail, then we're looking at this push down to these lower levels that we basically have had on the chart since yesterday. All right, so this is what I mean. It's somewhat of a mixed bag this morning. Beautiful confluence of bearish signals from yesterday's high, pretty good bullish signals from yesterday's low, and we're trading within the two signals. So we're going to have to take it basically level by level this morning. If we didn't have the 4-hour and the hourly giving us a bullish signal from the low of yesterday, then it would be a much clearer picture that we would want to be bears and we would be expecting a breakdown to a lower level. But because we got the counter signal last night, and now we're stuck in between both of them, right? So it just is what it is, right? We'll take it level by level this morning, and when these levels break, it's giving us a clearer picture as to maybe what we want to be doing. So let's talk about the levels above. Let's talk about the levels below. And again, we want to just establish that really good bearish pattern from the highs, really good bullish pattern from the lows. It's up to the market now to figure out which direction we're going to go here. And the breakout should be kind of a clue. Again, breakout is more than just a duck below and a pop back in, right? So on either side, we could pop right through, but if it brings it right back in, it's another fake out, right? Like what happened yesterday. So these are the levels we're going to be dealing with. I would not be too concerned with this 38. At this point in the overnight session, we got our leg down, and the market has basically come up and tested the 38 twice. So at this point, if we can't get through, I'm not even going to have the line. If we can't get through the overnight highs, which I'm not going to leave a line on the chart here, but if we can't get through there, then we know already that's that 38 retrace. Okay, so I'm going to get rid of that. And then if the bulls get up through the overnight highs, we've got 3 discrete levels here. Okay, remember yesterday there were 2 or 3 levels in a tight little area over here. I think the 88 to 89 and the 87, literally like a point or two away, and they held the first one nearly to the tick, and then they came down and held the second one nearly to the tick. So because these are close by, doesn't mean they're not going to use each of these levels. Okay, just maybe something like that. Just because they're 2 points away from each other doesn't mean we're not going to come up. And we see, I see it so often, that's why I'm saying this. We might come up, get some major pullback from there, and then end up coming up and coming to here and getting a major pullback from this one. So don't discount, just because they're pretty close together, don't discount each discrete area. So this is what we have this morning. You should have the close of the day before in the orange power level there if you have our daily power level indicator. And then from there, it's into our scaffolding level, 42.87, which should sound familiar to you guys because that was our scaffolding level from yesterday that worked unbelievably. In fact, it worked great on Friday of last week. It worked great in the overnight yesterday. It worked great during the regular market yesterday. So this morning, you never know. We've got 42.87. Okay, we've got 50% of yesterday's very bearish looking daily candle sitting right there at 42.89 quarter, 42.89 half. And then this line here is 61.8 of this sell-off. So each of these 3 levels above the current market price could potentially be trouble for the bulls. So get those on your chart, and then remember yesterday's high here. Very, very clear bearish signals from up here with a very bearish looking daily candle. So if the bulls end up getting through the high of yesterday, and I'm not talking about what happened yesterday, it popped through and came right back in, but if the bulls can really get through this high, then we're looking at a push up into the next area, 43.1575. Okay, and then all the other levels above we already talked about yesterday, so you should have them on your chart. There are market scaffolding levels 43.7375, okay, 43.71 quarter, and then this is that big major retracement, I believe the 61.8 retrace of the sell-off from the all-time high in the market up here at 43.84. Okay, and that's going to bring us to about 100 points to the upside. Definitely not out of the realm of possibility for the bulls to rip something more than 100 points. So if they get through there, I got to get rid of that green line like I said, but we've got the 2 other scaffoldings, 44.08 half and 44.34 quarter. So those are the levels of contention that we have up above us this morning if the bulls do end up breaking through this very bearish looking high from yesterday. Okay, on the flip side of things, if the bears do regain control, and remember, we don't know where it's going to happen. We got a pretty decent bearish signal here on the 60-minute from the overnight high, so that might be it. All right, they might just hold here, pull back, and now hold the close of the day before in our orange power level and continue to come lower. But we don't know where it's going to be. It could be from right there. The bulls could kind of bring things up out of the open and maybe fail from here or here or here. And when that happens, if it happens, then we're looking at the potential support zones we have down below for bounces. Okay, and so first things first, the low of yesterday, right? And again, do not forget that they could just kind of peek through and then come right back in. But if they can get through appreciably here and maybe even hold off the back end, we're expecting a push at least down to our scaffolding at 64 quarter. If they can get through there and continue to sell off, we actually have a pretty decent kind of high here in the market right around here. And then our first kind of important retracement level is basically in that area. So I'm not going to mark that swing, but we've got this fairly major retracement starting at 42.55 half. So we've got this level, right? It's around 64. We've got this level right around, say, 55 to 56 with that swing high over there. And if they can get through there, we're right into this pocket that it's really like the second pocket I really like. So remember, the first pocket was up here from yesterday, somewhere over here. I think I took the shading out now. The next major pocket that I like is down here right at the 61.8 retrace of this leg, or 50% retrace of the leg, and this major swing high. So we're looking at a range from about 42.39 half, 42.40 up to 42.43 here. So again, if the bears are strong here and we start to sell off, don't be surprised if right inside of this pocket here we get some type of rotation. Okay, so that's our next kind of stopping point on our roadmap. And then it's going to bring us down to our scaffolding down here at 42.2675. And then a couple points below that, 42.24 quarter, is the 61.8 retrace of this whole leg up ever since we made this low at 41.74 and pushed all the way up to this high from yesterday. Okay, so there's the 61.8. And then a little bit further, since we really should cover at least 100 points to the downside, because you never know in this type of market. If they can get through that pocket that we just talked about here, they can get through the scaffolding, they can get through the 61.8, and we're coming down into the next scaffolding here at 42.12. And then we've got this swing here right around 42.03 half. Now remember, yesterday, this swing we were watching was the low of the day. It came down, it broke it by 3 ticks, and it bounced right up into our scaffolding level at 87 for, again, I think it was what, like a 14-point bounce. So today, we've got a major swing high here, and then this one that I just mentioned over here at 42.03 half. So again, yesterday we saw it happen nearly perfectly. Today, it might not work, but I'm just saying that's the next major swing that worked, at least for yesterday, and I've seen it work over and over again. That could be a potential support as well. So if you are short, I would be taking profit maybe right in front of it in case we do get a rotation, and it also could potentially be a good buy. Again, low risk, right? If these levels work, they work within a point or two, right? So it's very, very, very accurate levels. So if it's wrong, it's wrong. You take your stop, you move on to the next setup. So don't know if I mentioned this, but we have 95.75, 41, 95.75 right below that swing, about 5, 6, 7, 8 points away. And then from there, I mean, if the bears get it that low, and let me zoom back out. If the bears get it that low down over here, we're all the way back to the major rotation that happened on the last day of May. So from there, we've got lots of stuff below, but I think that's going to bring us now 100 points lower. 41.71 is the scaffolding level. Remember, the market turned, I think, 41.74, and that 41.74 back in May happened to be a major retracement level nearly to the tick. Again, there's a reason we look at all these levels. Major retracements, swing highs. In fact, there's a major swing high and a retracement, and the market came right down on May 31st, rotated right off the swing high, bounced, and then came right to the major retracement, and that was the major rotation back up. All right, so all these levels we watch, the major swing highs I'm marking, the scaffolding levels, all this stuff is very, very important, and they basically are, in my opinion, the strongest levels you could rely on in the market. So if we get down there, just remember we have the scaffolding here, 41.71, and then from there it's going to be a pretty nice little swing all the way down to 41.41. Now, does that mean that there aren't maybe some levels between here that maybe make sense? Sure, but in the grander scheme, the larger picture, it's going to be a push down into 41.41. So that covers about over 100 points to the downside this morning, and it covers over 100 points to the upside this morning, as far as potential resistances up here and potential supports down here. And then remember, if the market ends up, and maybe I should go down to like my 3-minute, let's go down to my 3-minute chart here. If the market ends up trading inside of yesterday's range, it could be a very choppy market, right? We could just kind of mosey around, maybe use some of these levels nice and discreetly, but not a lot of range going on, very tight ranges, and it could just be very choppy between the high of yesterday and the low of yesterday. So be very careful inside of here. And then finally, to wrap things up as we get close to the open here, we're just about 3-4 minutes away. We have on our shortest time frame chart our moving averages that are great for scalp entries and even bigger, longer trades, but entries for very, very limited risk. And as you can see at the moment, it's just been a total shit show here coming, since the Globex open last night and coming into the open right here. So I would urge you to not do anything in this area. It could be a trouble spot, maybe what I would call like a no trade zone. All right, this whole pocket right in here, it's just a lot of garbage. So until we get outside of here, I probably wouldn't be trading anything unless some magical thing showed up. I don't like to make absolute statements in trading, because you could say even something like, I don't trade the overnights, and then once in a while you might see a perfect setup in the overnight, and so you put a trade on. I don't like to make absolute statements with trading because it's such a fluid thing. But for the most part, I really don't plan on doing anything inside of this box here because it's just a total chop fest. So just be aware, inside of yesterday's range, the previous daily range, we could be dealing with some chop. Outside of that, the other reason I came in here to talk about the 512 is that the moving averages right now are really tight and choppy themselves, as you would expect, right? So at the moment, we don't have like a beautiful setup. Sometimes we come into the morning and we are like this. So I could tell you that, hey, we've got the 200 moving average right up here. If the market pops up, we might find some resistance there, right? And then it eventually came, as the 200 came down, it came right to it and pulled back off of it there. This morning, it's not like we have a 200 coming across the chart right up there. So I could tell you that, hey, if the market pops up into it right there, that might be a good hold, right? So this morning coming in, everything's right in here, right close to price. So there's no other levels I can mention. Like I said, some mornings will come in and price will be, say, like far away. So we could talk about maybe a potential hold from the major 200 moving average or the VWAP. But this morning, it's so tightly packed with price that there's nothing to mention. All right, so we've got everything out on the charts here this morning. We talked about the bias, that there was two conflicting signals from the high of yesterday and the low of yesterday. So it's really anyone's bet here. I would like to mention, though, that we technically do have a little bit more weight on the bearish side because of that daily candle. Now, if there was a daily signal there, that would be the icing on the cake. I'd put a lot more weight expecting the market to sell off. It's not there, but we do have a very bearish daily candle to bolster the 4-hour and the hourly bearish signal. So maybe there's a little bit more weight on expecting a break lower this morning. And that's what I'll leave you with here coming into the open. I'll erase this out and we'll see what happens. We just held the close of the day before, the orange power level, and we're pushing down to retest the low of yesterday. And like I said, maybe there's just a little bit more weight for the bears this morning to expect this pullback down into our first support, potential support at 64.25. But it could go either way, right? So keep that in mind. And this breakdown, again, not too surprising, but what we want to see is a hold below the low of yesterday for the push down here. If this is just a little peak by 5-6 points and it comes back, then it's a fake out, right? So that's what I'll leave you with this morning, guys. I hope you have a great trading morning, and I will see you tomorrow morning.